let's start by talking about the entire challenges part of the Indian steel industry, whether it's in terms of imports that we are seeing from China and Russia, or in terms of government really not looking at the import duty hike.
Well, to me, it's an industry which has always been challenging. It's a cyclical industry, so things go up and down. The challenge today is that there's a lot of steel coming out of China into the world markets, which is directly and indirectly affecting us. Directly because a lot of that steel comes into India, indirectly because it depresses world prices to abnormal levels. We are a capital-intensive industry. We are operating in a high cost of capital environment.
Right.
So the industry profitability is important to justify future investments and future cash flows into growth. So we've been talking to the government. Government is supportive. I think you heard the minister today and the steel secretary. Government obviously wants to find a fair balance between what is fair to the steel industry and what is fair to the consuming industry. We respect that. Our only submission is we are a capital-intensive industry, and we should not be mortally affected by short-term flows in steel.
What about the imports from Russia and China? Are they going to put significant pressure in terms of pricing? Because also because of the currency fluctuations, it is going to be very cheap to import Russian steel.
It is not as much of Russian steel is coming into India as the Chinese steel, but again it has an impact on international prices. Russia is even more competitive than China when it comes to the fact that they have a lot of the raw materials, good quality raw materials with them. And the ruble is moved from 30 to a dollar to something over 60, and now it's about 55, 56. So that has suddenly made them very competitive. So there are a lot of Russian offers in the international markets, and the Chinese have been trying to compete with the Russians, and that has depressed prices by over $150 in the last 6 months.
Okay, let's talk about the Kalinga Nagar plant, and again it has been delayed mainly because of the approvals that are pending from the Odisha government. When do you expect to start the plant, and what about the iron ore security for that?
Well, the Kalinga Nagar plant from a physical point of view is practically ready. We are ready to start the coke ovens within 2 weeks of getting the permissions. And starting the coke ovens is the first step in commissioning an integrated steel plant, and the energy from the coke ovens flows into all the subsequent facilities that are coming up. So there's a commissioning sequence. We are ready to start the minute we have the consent to operate. The consent to operate is issued by the Odisha government, but there are some clarifications which have been sought from Delhi. So from Bhubaneswar it has gone to Delhi. In Delhi we have given them the clarifications that they've sought, and I hope any time soon we should get it, and the clock starts ticking once we get the clearances from the government.
What about the 18 mines that the Odisha government had held up, and they are possibly going to go into auctioning? I believe from the 26 that they had held up, 4 of iron ore mines have already been opened for Tata Steel. The remaining 18, what do you expect, and how soon can the auctioning happen?
I don't think there's a conversation just now on auctioning those iron ore mines. The government of Odisha and the government of India are more or less on the same page as far as the MMDR Act is concerned. And I think the government of Odisha is trying to see how to sort out the problem. There has been some guidance they've received from the court, and by the end of this month they have to take a decision. And I'm hopeful that they will take a decision by the end of the month. But I think things are moving in the right direction. That's the only comment I can make.
So Tata Steel has been pretty quiet for the coal block auctions. In the next round of auctions, which is possibly again in April, according to coal ministry sources, how aggressively will you look at participating?
We will look at that from a mine-to-mine basis. We had looked at 4 mines in the last auctions. We decided not to bid because some of them were not so attractive. Some of them we felt were going to be more costly going forward. And in some sense, I don't think we would have got it anyways, because the price we were willing to bid was much lower than what others had bid. It's very important to understand that mining in India is not cheap. A lot of it was affordable over the last 10 years because international prices of raw materials are very high. But at today's cost of coal and iron ore is still okay because it's an open cast mining. Coal, where there's a lot of underground mining and there are a lot of systems cost in terms of taking care of the environment and the forest issues and all that. It's not such an easy decision to go into coal mining. It may make sense for the power plants, but for the steel plants, the quality of Indian coal is not so great. So we anyway need to spend a lot of money on the washeries to wash it down to the ash levels which work for us. So it's a lot of investment. So I think steel companies will be more circumspect when bidding for coal mines, and will take the right economic decision. So we will take a call based on the mines on offer and the economic value which we are willing to pay for it, because we don't want to be stuck with mines where the cost of importing is cheaper than the cost of mining.
And last question, in terms of margins, we know that there was pressure both in the European as well as the Indian side. Q3, how has that panned out? And next 6 months, do we see better days coming for the steel industry?
Overall, at a steel industry level, yes, there's been margin pressure again because of the fact that prices have been weak. Going forward, let's wait and see if demand picks up. Things can be better, and let's wait and see. As the steel industry, we are always hopeful that the future is brighter than the current.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.